Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
Hello and welcome back. Today we're diving into Palantir Technologies, specifically their Q2 2025 earnings call. That was back on August 4th, 2025. And it really feels like a new benchmark for the company. There's been, a lot of anticipation around these calls, especially given where Palantir sits in the whole AI landscape. It's often debated, right? So our mission today, we want to distill the really impactful stuff, the key numbers, the strategic thinking shared by Palantir's leadership, and, the analyst questions too. We're aiming to help you grasp the essence of their performance, their outlook, and what it all might signal for, well, tech and business more broadly.
Yeah, exactly. And that's a really important point. These earnings calls, they give you this unique window, right, into how a company is really doing. It's not just the numbers, though obviously those are, a big piece. You get a direct look at financial health, sure, but also operational strategy, and maybe the most interesting part, their vision for the future, straight from the top execs. And for Palantir, this call had the CEO, the CTO, CFO, the CRO, CLO, plus, sharp questions from the analysts. What makes this call so interesting, I think, is that they didn't just, hint at good performance. They showcased some, frankly, extraordinary numbers and made some pretty bold claims, too, audacious even, things that really deserve a closer look. This felt like more than just an update. It felt like a statement.
Okay, let's definitely unpack that, starting with those headline numbers, because they really do stand out from Q2. These aren't just, figures on a spreadsheet. They seem to tell a story of serious acceleration.
They absolutely do. And what's fascinating, really, is the sheer scale of what they achieved, especially when you put it in the context of enterprise software. That's a tough market. Intense competition, often pretty slow adoption cycles. So first off, they crossed the billion-dollar mark in quarterly revenue for the first time, $1.004 billion.
Wow, $1 billion in one quarter.
Exactly. And that's not just a number. For Palantir, a company often seen as, high growth, but maybe a bit niche, this is a major transition. It signals they're moving into the big leagues, large-scale enterprise player territory, delivering substantial revenue consistently. The real question now is, how do they keep that disruptive growth going at this kind of size? It's a different ballgame now. They'll be measured against the established giants.
Right, and it wasn't just hitting the billion, was it? The growth rate itself was impressive.
Oh, incredibly so. Overall revenue growth for Q2 jumped to 48% year over year.
48%.
Yeah, and that wasn't just good. It actually beat their own previous guidance by almost 10 percentage points.
10 points.
And it was a massive 21 percentage point increase compared to their growth rate in Q2 of the previous year.
So a huge acceleration.
Exactly. A significant jump in their growth path. It kind of defies the usual pattern for companies getting this big, a real re-acceleration.
That is staggering, especially that acceleration piece. And speaking of big jumps, they made a point of highlighting their Rule of 40 score. Now, for listeners who might not be familiar, could you quickly explain what that is? And more importantly, why is Palantir's score catching so much attention right now?
Sure thing. So the Rule of 40, it's a pretty common benchmark, especially in the SaaS world, software as a service. It gives you a quick snapshot of a company's financial health and efficiency. It's simple but powerful. You take the company's revenue growth percentage,
Which was 48% for Palantir in Q2.
right, and you add its adjusted operating margin percentage.
Okay.
The general idea is if that sum hits 40% or more, the company's seen as growing efficiently and profitably, balancing growth with, sustainable operations.
Makes sense. So what was Palantir's score?
An absolutely astounding 94%.
94.
94. And this isn't just good. It was an 11-point jump just from the previous quarter, their highest ever. Now, a score like that, especially for a company just crossing that billion-dollar quarterly revenue mark, it's considered, anomalous, or as their CEO, Alex Karp, put it, baller. In enterprise software, that kind of number at that scale is, it's rare.
Okay, baller. I like that. But what does it actually tell us? Why is it so significant?
It signals incredibly strong financial health, fantastic operational efficiency, and this rare ability to grow super fast while also boosting profitability. At scale, the real insight for you, the listener, is thinking about how they pull this off. Is it like a super scalable product? Lower cost to acquire customers, maybe, because of their sales model? We should get into that later.
Yeah, definitely.
Or maybe a different R&D approach. A 94% score really challenges that old idea that you have to sacrifice profits for massive growth. It makes Palantir a really interesting case study in capital efficiency and tech.
And they expect this to continue.
Yeah, they're projecting 91% for the full year 2025. So they clearly believe this exceptional performance is sustainable, a strong sign of ongoing operational discipline.
Okay, impressive global numbers, anomalous Rule of 40 score. But where's this growth actually coming from? It feels like the U.S. business is the real powerhouse here, right?
Oh, absolutely. Unequivocally. The U.S. business is the primary engine. The numbers paint a really clear picture of where their focus and their success lies. U.S. business grew 68% year over year. And get this, it now makes up 73% of the entire company's revenue.
73%. Wow, that's
Oh.
concentrated.
It is, and it seems very much like a strategic choice, not, a limitation. And if you dig into that, the U.S. commercial segment, that's the real standout. It grew an amazing 93% year over year.
93%, just commercial.
Just U.S. commercial.
Yeah.
And 20% growth just from the previous quarter. Its share of the total revenue pie jumped significantly, too. It's now 31% of total Q2 revenue, up from 23% just a year ago.
That kind of acceleration in a market like the U.S.,
Yeah.
that's really something.
It really is. Highly unusual. Speaks volumes about the demand for what they're offering. And even their U.S. government business was strong. 53% year-over-year growth, 14% sequential. So continued strength in their kind of foundational markets, too.
Okay, so this is where it gets really interesting for me, this huge domestic focus.
Yeah.
How does that fit into their bigger strategy? What does that signal?
Yeah, it connects directly, and I'd say pretty profoundly, to their stated focus on delivering AI production impact, specifically within the U.S. This isn't just about selling code. It's about enabling real, tangible AI applications, things that drive measurable value for American companies and government agencies. So that massive growth in the U.S., especially commercial, it really indicates that their AI platform, AIP, is getting huge traction exactly where they've aimed it, helping businesses actually use AI for concrete results. Bottom line stuff.
So it allows them to be more focused.
Exactly. Concentrate resources, tailor solutions for the U.S. market, build deeper partnerships here. It suggests the demand for truly effective, deployable AI, not just cool tech demos, is maybe strongest in the U.S. And Palantir's position to grab that demand, maybe because of their deep government roots. They understand complex data, tough operational challenges.
Right. And there's probably a national push for AI competitiveness playing into it, too.
Definitely. Economic competitiveness, national security,
Yeah.
It all ties together.
And it's not just the revenue growth, is it? The call also highlighted record bookings, a lot of big deals. It sounds like the nature of their customer relationships is changing, deepening maybe.
That's spot on. They reported their highest ever total contract value TCV. That hit $2.3 billion.
$2.3 billion.
Yep. Up a staggering 140% year over year. And their annual contract value, ACV, also hit a record $684 million. These aren't just big numbers in isolation. They represent the scale of new business and, critically, expansions with the customers they already have.
So landing bigger deals and growing the ones they have.
Precisely. Get this. They closed 157 deals worth $1 million or more, just in Q2.
157.
And of those, 66 deals were over $5 million, and 42 deals were over $10 million. So it shows the volume, yes, but also the increasing size and strategic importance of these deals. More bigger deals suggest clients aren't just dipping their toes in, they're committing big strategic implementations, enterprise-wide stuff.
That implies a lot of trust.
Huge trust and a recognition of the platform's potential across the whole organization and the strength of those existing relationships. Super clear. Their top 20 customers now average $75 million a year each in trailing 12-month revenue.
75 million average for the top 20.
Yeah, that's up 30% from just a year ago. So they're not just keeping customers, they're significantly growing their spend.
Yeah.
Big upsell, cross-sell success.
And the overall customer count grew too.
It did. 43% year-over-year growth, up to 849 customers. So healthy expansion, new logos coming in, while they also expand massively within those key accounts.
What about retention? That's always a key metric.
Yeah, right. Net dollar retention, which tracks how much existing customers are spending compared to before. That hit 128%.
Okay, 128%. What does that mean exactly?
It means, on average, their existing customers are spending 28% more than they did in the same period last year. That's up 4 percentage points just from the prior quarter. It shows customers are sticking around and significantly expanding their use, driven by the value they're seeing, especially from AI solutions. 128% is really robust. Signals strong product stickiness, high satisfaction.
And it means less pressure to find brand new customers constantly, right?
Exactly. A big chunk of their growth is organic, coming from the base they already have. Very efficient.
So all this growth, these huge deals, deepening relationships, it's translating to the bottom line too, right? This isn't just growth for growth's sake anymore. We're talking serious profitability.
Precisely. It's not just a growth story. It's profitable, cash-generating growth, which is, frankly, a rare combo, especially for a company still scaling this fast. Adjusted operating margin, 46%.
46%. That sounds really high for software.
It is exceptionally high, especially given their continued investment in R&D and expansion.
Yeah.
And their adjusted free cash flow, $569 million. That's a 57% margin.
Wow. So the cash is really rolling in.
It powerfully underscores their ability to generate cash from operations, a highly efficient model where revenue converts quickly into actual funds. And even looking at GAAP numbers, which include things like stock-based comp that tech companies often have.
Right. It's stricter accounting standard.
Yeah. GAAP operating income was $269 million, a 27% margin, and GAAP net income was $327 million, 33% margin. The key insight here is the consistency. They expect this GAAP profitability to continue every single quarter this year.
That's huge, moving past just adjusted profits.
It really is. It shifts investor perception, validates the long-term model, suggests they're becoming more mature, financially disciplined, not just invest at all costs. Plus, they have a ton of cash. $6 billion in cash, equivalents, and short-term treasuries.
$6 billion. That gives them a lot of options.
Immense strategic flexibility. Investments, acquisitions, weathering downturns, they're covered. And they even bought back about 2.5 million shares.
Which signals confidence for management.
Yeah, usually signals I think the stock is undervalued, and it returns some capital to shareholders. A positive sign overall.
Okay, so we've definitely seen the what? Incredible numbers, growth, profitability. Now let's pivot to the how. How does Palantir actually deliver this kind of value? How do they achieve these results? You mentioned it revolves around their unique take on AI and this thing called ontology.
Right, and this is the crucial question, isn't it? The AI market is so crowded. Everyone's talking about AI. What makes Palantir's approach genuinely different enough to produce these kinds of numbers? And it really does seem to boil down to their foundational philosophy. It's quite different from many others out there. They argue that large language models, LLMs by themselves, they're a jagged intelligence.
Jagged intelligence.
Yeah. Meaning powerful with language, but prone to mistakes, inconsistencies, those hallucinations people talk about. They basically say LLMs simply don't work in the real world for critical business stuff without Palantir.
Okay, bold claim. So what's their solution, this ontology?
Exactly. They define ontology as pure understanding concretized in software. It's not just abstract. It's the core mechanism they use to integrate LLMs with an organization's actual stuff, its workflows, its data, its operational reality. That's how they unlock real enterprise value.
And that's a really powerful distinction they're drawing. So how does this ontology actually bridge that gap between the cool potential of AI and making it practically useful, trustworthy even, for big companies?
It's absolutely central. Think of it like this. An LLM can write a poem or summarize a news article, right? But it doesn't inherently understand the complex reality of, say, a hospital. It doesn't know the specific relationships between a patient record, a particular operating room schedule, inventory levels for a certain drug, and regulatory compliance rules for that procedure.
Right. It lacks context.
Precisely. Palantir's ontology builds that context. It creates a kind of digital twin or a semantic map of the organization's whole operation, how everything connects, the rules, the relationships. When you connect an LLM to that map, the LLM gains that pure understanding. It gets the context, the constraints, the rules of that specific business. So its outputs, decisions, automations, insights become accurate, actionable, compliant, and relevant. It minimizes those catastrophic errors.
So it makes the AI safe and useful for real work.
Exactly. It's the difference between a trivia machine and an AI that can reliably manage a factory supply chain or spot sophisticated financial fraud. Their long-term investment in this ontology concept is really what they believe positions them uniquely to meet that real-world AI demand.
And this foundational work, this specific approach, has led to their AI platform, AIP, and these ontology web services, OWS. You mentioned customers are actually building on top of AIP. What does that signify?
Yes, exactly. That was a key point from their CTO, Shyam Sankar. The realization of their ontology web services idea as a real architectural thing is accelerating. And what's really compelling is that customers aren't just using AIT tools, they're actively building their own software on it. That's a huge leap.
Building on Palantir, not just with Palantir.
Precisely. We're seeing software companies, big enterprises choosing to replatform, moving away from the more generic services you get from the big cloud providers, the hyperscalers.
Why would they do that?
Because AIP apparently offers highly opinionated, purpose-built building blocks designed to speed up value creation by, they claim, orders of magnitude, like tenfold faster. It means Palantir isn't just selling an app, they're providing a new foundational layer, almost like a new operating system specifically for enterprise AI.
Do they have examples of this?
They do. They mentioned Chris Johnson, co-CEO of Teletracking, that's a healthcare logistics company. He apparently shared publicly that after they re-platformed onto AppIP, he was just flooded with inquiries from other execs.
Yeah.
He said it allowed them to leapfrog their competition, get new AI-powered solutions to market much faster.
Wow. So it becomes a competitive advantage for their customers.
Exactly. And Palantir sees this as a huge continued investment area and a major growth driver, both commercial and government. It shows AIP isn't just a tool, it's a strategic platform for innovation.
So it's enabling this new level of autonomous execution within companies. They mentioned tools like AI, FDE, and warp speed. Can you break those down? How are they bringing this ontology-powered AI to the front lines?
Yeah, absolutely. So AI FDE, that stands for AI Frontline Development Environment.
Right.
Think of it as a core part of AIP designed for autonomous execution. It helps with all sorts of tasks, actually creating and editing the ontology itself, building that digital twin, setting up data transformations, building new functions, debugging, even building whole new applications.
And it works autonomously.
To a degree, yes. A key feature is its closed-loop error handling. It can spot and fix issues itself, only looping in a human when necessary. And it's designed for collaboration. It integrates with AIP's branching system, so teams can work on AI projects using familiar version control, like software development.
So it makes building AI solutions more intuitive, less code-heavy.
That's the idea, a fundamental shift in how these things get built and deployed. Then you have Warp Speed. That's their modern manufacturing operating system, also built on AIP. It's aimed at industrial and defense customers and delivering big results there.
Like what kind of results?
Well, one specific part of Warp Speed, called MRP Speed, apparently cut the time for production line balancing at one customer from 1 day down to 1 hour.
1 day to 1 hour, that's transformative in manufacturing.
Absolutely. Massive efficiency gain. Allows rapid adaptation to changing demands, supply chain issues, you name it. And this capability is opening doors, especially in U.S. shipbuilding, which ties into that whole national push to revitalize the maritime industrial base. Huge strategic importance, right? Global competition, defense readiness.
Yeah, optimizing shipbuilding could have huge ripple effects.
For sure. And related to defense, they also mentioned their Maven Smart System adoption keeps growing fast. Usage apparently doubled again since February.
What does that signal?
Just clear increasing demand from combatant commands for these kinds of AI-powered software capabilities. Direct military application of their core platforms is scaling up.
These sound like incredibly powerful tools delivering real impact. Can you give us some more of those tangible customer success stories? The concrete examples really help illustrate the value for listeners.
Absolutely, and the call was full of them. They really paint a picture of how this AI and ontology stuff translates into real measurable impact across different industries. Okay, so take Citibank. Customer onboarding, KYC checks. Security processes usually super complex, slow, highly regulated, right?
Definitely. Can take days.
Well, Palantir apparently helped reduce processes that took 9 days down to mere seconds.
9 days to seconds.
Seconds. That's not just efficiency, it's risk reduction, better customer experience.
Yeah.
Huge in competitive financial services. Or look at Fannie Mae, a core part of U.S. housing finance. They're using Palantir to spot potential mortgage fraud. They cut the detection time from 2 months down to seconds.
2 months to seconds.
Yep. Think about the savings. Preventing millions in future losses for the housing market by catching fraud almost instantly. That's systemic impact. In healthcare Nebraska medicine, they reported a 2,100% increase in using their discharge lounge.
2,000%.
Yeah, which they said is like adding a whole extra hospital unit in terms of patient flow. Helps with overcrowding, efficiency. They even came up with a term, a Palantir unit of time, meaning they can drive significant value in less than an hour. That emphasizes the speed of impact.
That's quite a metric.
Isn't it? Then in automotive, Lear Corporation, global leader in seats, E-Systems. They just signed a 5-year extension. They've got over 11,000 users on Palantir, running over 175 use cases. Things like managing complex tariff exposure, huge deal in global supply chains, and balancing manufacturing lines. Lear says it gives them a first-mover advantage in the automotive industry. Helps them react incredibly fast.
And it's not just existing customers expanding. New ones are coming in big, too.
Yeah, great example. A major healthcare company. They did one of Palantir's boot camps in April. Just 1 month later, they signed an $88 million TCV deal.
$88 million after 1 month.
Yep. To coordinate and automate patient care. Shows how effective that immersive bootcamp model can be at showing value and closing big deals fast. Another one, an American telecom company. Started with Palantir in 2022. Their contract has apparently increased tenfold since then.
10x.
10x. And they're projecting hundreds of millions in cost savings. Shows that long-term compounding value potential for big infrastructure players.
Mm-hmm.
And on the government side, huge deals too. The U.S. Space Force Space Systems Command awarded them $218 million for synchronized multi-domain warfighting, integrating data across different combat areas.
Critical stuff.
Very. And then the really big one, the U.S. Army. A landmark 10-year enterprise agreement worth up to $10 billion.
$10 billion. Over 10 years.
Up to, yeah. And it consolidates 75 existing contracts into one single partnership.
75 contracts rolled into one.
It speaks volumes, right? Underscores that deep, long-standing relationship. And the Army's trust in Palantir as a core unifying platform for its massive data and operational needs. These aren't just small wins, they're major strategic commitments based on delivered value.
Okay, absolutely fascinating. Beyond the tech, beyond the financials, there's this really distinct philosophy, isn't there? Underpinning how Palantir operates, especially their sales approach, their mission. Let's dig into what makes them so different. How does this unique worldview shape the business?
Yeah, this is where it all kind of connects to the bigger picture. Their unique way of operating, particularly around getting new clients, it's a direct reflection of their core beliefs. And it seems to have clearly fueled that anomalous growth the CEO talked about. For years, they've rejected the idea of having a huge traditional direct sales force. Armies of salespeople hitting the phones.
Right, which most enterprise software companies rely on heavily.
Exactly. And Palantir's decision was widely seen as, doomed to failure by a lot of industry watchers back in the day. Their philosophy is they believe they should always be downstream from the value we create.
Downstream from the value. What does that mean practically?
It means they focus intensely on generating massive, undeniable, measurable value for the customers they already have first. And then they figure out how to capture that value, often through expansions or referrals. It's basically the complete opposite of the usual sales model, where you promise value up front and hope to deliver later.
That is a radical departure.
Yeah.
How does it actually play out? What are the effects of doing it that way?
Well, it means their primary sales force, as they put it, becomes their current customers telling other customers.
Word of mouth, essentially.
Yeah.
But supercharged.
Exactly. It creates enormous credibility right from the start, instead of a skeptical prospect listening to a sales pitch about unproven claims. Their initial meetings often apparently skip that whole phase. The question immediately becomes, okay, we heard what you did for company X. Tell us how we can get that kind of leverage. They shared stories, customers moving to new companies and immediately calling Palantir, or getting a call from someone whose colleague raved about the results they got.
So the sales cycle potentially becomes much faster, more efficient.
That seems to be the case. Allows them to ramp up engagement quickly, faster expansions, faster new customer conversions. And the economics are compelling, right? Potentially a much, much lower customer acquisition cost compared to hiring and managing huge sales teams.
Are there downsides? Does it limit their reach?
Potentially. It might work best for complex, high-value software where that ROI proof and peer validation is critical. Maybe it limits reach to organizations that are already sort of in the know or predisposed to that kind of transformational project. They also contrasted this with what they see as more rigid approaches in, say, European industries. They described the American market as more plastic, more open to rapid change and adopting disruptive tech. That cultural difference, they suggest, is part of why they're growing so fast here.
And this unique model, especially strong in the U.S., seems really tightly linked to a very clear mission, almost an ideology, that the CEO especially is very vocal about. This isn't just business strategy anymore.
No, definitely not. The CEO, Karp, was very explicit about their no-compromise stance on their core beliefs, which are frankly quite distinct in the tech world. Things like a firm belief in America as the leader of the free world, the superiority of the West, the need to actively fight for those values, and the mission to provide an unfair advantage to American companies and government through their tech.
That's strong language for a tech CEO.
It is. And these values, they say, are baked into the company structure. They talk about having no parasitic elements, their term for things like big sales teams that they feel don't add direct value, flat hierarchy, laser focus on value accretive stuff like ontology, Foundry, Maven. They believe this mixed unique product, efficient operations, strong values creates the perfect time for Palantir, and even provocatively, a perfect time for a revolution in the United States of America, led by their technology.
Wow, a revolution.
Yeah. And that commitment to giving warfighters decisive advantages over our adversaries is a direct part of that mission, too. Explains the deep defense ties.
It's really unusual for a public company to have such an explicit ideological stance, isn't it? What are the implications of that? Does it attract or repel customers?
That's the key question, isn't it? Does it limit their market, alienate clients who don't share those values, or operate outside the U.S. focus? Or does it actually act as a powerful magnet, attracting specific clients, talent, government partners who are looking for that alignment? It certainly positions Palantir differently, not just a vendor, but almost like a geopolitical player, a values-driven entity in a way few other tech firms are.
So Karp talks about an American revolution driven by their tech. What does it actually mean for how they see their role in society, especially regarding the American workforce, maybe even blue-collar workers specifically?
Yeah, it leads straight into that. And this is where their vision gets really expansive and maybe quite provocative for some. They are, in their words, anomalously bullish on all aspects of American life, including and especially people in the blue collar. Their vision isn't just top-down optimization. It's about empowering the front line, arming working-class people with AI agency-enhancing skills, making them better, faster, and more productive.
Not just replacing them with AI, but enhancing them.
That's the core message. And they gave specific examples from the call. ICU nurses getting more time with patients because AI handles routine scheduling or prediction tasks. Factory workers, say, in the submarine industrial base, saving days on complex part loading stuff that used to involve digging through ancient manuals so they can focus on building things.
Real practical examples.
Exactly. They even mentioned training people from non-tech backgrounds like former casino workers for high-end EV battery maintenance jobs, showing AI can create new skilled jobs, enable reskilling. They truly seem to believe AI is giving the American worker superpowers.
Superpower.
Yeah, and that the really creative AI applications, they're emerging not just from PhDs in computer science, but from blue-collar workers, from self-taught people, autodidacts, who understand the real-world problems.
That's a fascinating perspective. Are they doing anything to encourage that?
They are. They launched something called the American Tech Fellowship. The goal is to find, empower, credential, and train these individuals, bridge that gap between practical smarts and AI tools. The CEO even said people with less than a college degree are creating huge value with their product, sometimes more than college grads. Really challenges traditional ideas about who drives tech innovation.
And they want to connect this to earnings.
Apparently so. They mentioned wanting to reach out to labor leaders to help workers get AI-enhanced earnings, suggesting a future where AI productivity gains could flow directly to workers' paychecks.
Which ties into that other provocative statement Karp made about corporations regaining their First Amendment rights to an opinion. How does that connect?
Yeah, it's a bit dense, but the idea seems to be, if a company adopts Palantir's tech, achieves superior efficiency, becomes financially independent, then it gains more freedom. Freedom to express its values, operate without bowing to external pressures or, traditional corporate norms. He's essentially linking technological superiority and economic power derived from their platform to greater corporate autonomy and influence in society. It's a bold claim connecting tech, economics, and even free speech.
Definitely a lot to unpack there. Okay, looking ahead then. The leadership sounds incredibly optimistic, right? About the future, financials, attracting talent. What's the outlook?
Yeah, it's not just reflecting on a great quarter. They gave really strong guidance for the rest of the year, speaks volumes about their confidence, and they also talked quite a bit about their unique approach to talent. So for Q3 2025, the next quarter, they're guiding revenue between $1.083 billion and $1.087 billion.
Which is strong growth again.
Oh, yeah. Over 8% sequential growth and 50% year over year. Very strong. But even bigger is the full year 2025 guidance. They raised it significantly, now expecting between $4.142 billion and $4.150 billion for the full year.
And what kind of growth is that?
That's 45% year-over-year growth for the entire year, and it's a huge 9-point increase from their previous guidance. They're biggest full-year guidance raise ever.
9 points. That signals huge confidence in the pipeline.
Massive confidence, continued momentum expected, and specifically for that U.S. commercial segment, they raised guidance there too, now expecting over $1.302 billion.
Which is what kind of growth?
At least 85% growth just in U.S. commercial shows that remains their absolute rocket fuel.
And profitability stays strong too.
Yep, raised guidance for adjusted income from operations, adjusted free cash flow, and they keep reiterating, expect sustained GAAP operating income and net income every single quarter of 2025, reinforcing that consistent profitability story. Major positive signal.
Beyond the numbers, they talked about talent. In this market, where everyone's fighting for AI experts, engineers, how are they attracting and keeping the people needed to hit these huge goals?
It's a great question. They stated their retention has actually remained really strong despite the fierce competition. Their philosophy seems to be less about just perks and pay and more about giving people access to problems that matter, the chance to bend the arc of history, as Karp put it.
So appealing to a sense of mission.
Exactly, a mission-driven culture, attracting people who want to tackle big, complex, critical global challenges. And Karp made another bold claim here, so coming to Palantir is by far the best credential in tech, that it basically sets your career for life.
The best credential in tech. Better than, say, a top university degree.
That's the implication. He talked about re-credentialing, meaning once you're inside Palantir, your previous background school, social class becomes kind of irrelevant. Being a Palantirian is the key credential. It suggests this internal meritocracy where your contribution at Palantir is what matters most. Could be a powerful draw for people who feel traditional credentials don't fully reflect their ability.
That's a fascinating cultural angle.
Yeah.
How does that unique talent approach, that intense mission-driven vibe, how does that actually influence their speed, their impact?
It seems to be a core differentiator. Directly impacts innovation speed, their ability to deliver on these complex projects. It creates an environment where people are driven by purpose, not just a paycheck, which leads to what they describe as a grinding work ethic, intense dedication. People reportedly working around the clock because they believe they're solving crucial problems for governments, for major industries, working for a higher purpose.
Sounds intense.
Very. They describe it as very different than anything they've ever worked on. People coming from, say, academia with its platitudes into this frontline environment where things matter, where the consequences are real and immediate. This collective drive aligned on critical problems, focused on practical application. It seems to fuel rapid innovation and delivery. It's a high-performance culture focused on outcomes, deep engagement, powerful engine for growth.
And lastly, they mentioned policy engagement. The White House AI Action Plan. What was your perspective there?
Yeah, they sounded pretty excited about it. They've been involved in processes related to the White House AI plan. They feel the plan is basically taking all the brakes off AI development and deployment, creating a more permissive, encouraging environment for innovation. They like that it encourages an empirical journey, focusing on implementation, real results, not just theory or endless debate.
And it aligns with their focus.
Seems so. They highlighted the plan's recognition of a crucial American open AI tech stack. Fits right into Palantir's own narrative. They see it as a shift away from hand-wringing about AI risks towards actually doing things, realizing the value. This kind of policy environment, they feel, is fostering industry-wide excitement to get things done, signals a supportive backdrop for their approach, potentially speeding up adoption, especially in strategic sectors.
Wow. Okay, what an incredible look into Palantir's latest quarter and their whole worldview. It's definitely clear they aren't just about the numbers, impressive as they are. They're pushing a very specific, maybe even provocative vision for AI's future, its impact on the U.S. economy, the workforce. It's quite something.
Absolutely. And if you connect it all, it really does suggest a profound shift underway. How AI is being deployed. Not just tech for automation anymore, it's being positioned as the strategic asset with huge societal economic implications. Workforce empowerment, national advantage. Their success really challenges a lot of the conventional thinking about growth, sales, even what a tech company is.
So for you, our listener, maybe here's a final provocative thought to chew on. If Palantir's model, empowering frontline workers with these AI superpowers, prioritizing immediate measurable value, if that's truly gaining this much traction, what does that mean for the future of work, for all of us? And maybe more critically, what does it mean for the competitive landscape, for those companies, those industries that don't adopt this kind of rapid, value-first approach to AI, or that still see AI as, something distant, theoretical, not an immediate operational must-have? Lots to think about. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.